Hey guys, welcome back to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. We're going to go off the beaten path today. Instead of talking about high growth stocks, really healthy companies that could go from a small or micro cap to a mid to large cap, we're actually going to look at something a little bit more sustainable. We're going to talk about income producing stocks, i.e., dividend stocks. So, dividend stocks essentially pay you cash every quarter or month, depending on whatever period they outline in their prospectus or communicate with shareholders. I want to show you guys my new sexy dividend portfolio that produces over 10% with some really amazing companies that do include some very high growth, long-term high growth companies, um, and how you can mirror or do similar research to potentially find wonderful dividend stocks. This is not my main investing focus. This is something more of putting away money on the side to ensure my nest egg is going to be very healthy in 20, 25 years, which is quite a ways away, but just don't stop allocating funds for that. So we're going to look at that. And yeah, I think that's about it. So without further ado, let's jump in. All right, so I use M1 Finance for my dividend investing portfolio for a couple reasons. Number one, they have a checking account which produces a 3.3% interest annually. They have a brokerage account that I can use to trade everyday regular stocks. They have an investment IRA account. And they also have a credit card. So they're kind of like an amazing all-in-one suite. And when I do get these dividends in the future, I don't have to necessarily reinvest. I could just move them over my checking account and have my dividends right on my card. Boom. So M1 is great. I'll put a link in my description if you want to sign up. Nobody's ever signed up with my links, and I don't mind, but do some research on them. See if you want to look into them if you want. That is up to you. So I have 5,000 in my checking to get, the 3.3% rewards. The credit card is 125 a year after the 3-month trial. So with that, they do 10%, 5% back, etc. A bunch of cool little benefits as well, but we're not here to talk about that. So here is my dividend investing portfolio. As you can see, I have one humongous, can, you guys can't see it, one humongous position, and that is ICANN Enterprises, ticker symbol IEP. Hindenburg released a short report for Carl Icahn, who is a billionaire, their company, and I had to freaking buy that dip. It went from $50 down to 28. My average is now 37.99, which is below the current share price. So I'm in the green. I'm in profits there. So I have IEP, JEPQ, FTF, JEPI, ticker symbol O, SPYD, CCU, SQM, DOW, DOW, DAC, Danos Corp, TAK, Takeda Pharmaceuticals, MO, Altria Group, Starwood Property, STWD, British American Tobacco, BTI, Royce Valley Trust, and that is all of my holdings. And if I go to the right over here, you can see overall my total return is showing 5% down. But if we go down here to my holdings, you can see I have 15 holdings and I have a dividend yield of 10.76. So that is a great dividend yield that, I mean, is pretty amazing. I think conservative is normally 5%. But given my allocations here, the diversity, I do know I'm really heavy on IEP right now, but my contributions over the next 4 to 6 months are going to be evenly distributed to these other companies. As you can see, Carl Icahn, I have 41% of my funds allocated there when it should be 14%. And so JEPQ has 9.5% out of 14, and everything else is very under what should be balanced. So if I put in $1,000, it's gonna evenly distribute between all the other 14 holdings and not IEP, because IEP is very saturated right now with my funds. So I have all these companies. I love them. I will show you what this looks like over the long term, and we'll look at some charts. All right, everybody, we are looking at my dividend reinvestment and share growth spreadsheet. This basically accounts for your starting principal, how much you're going to contribute every year, the dividend yield, and the expected share growth over the whole lifespan. So let me just dive right in and show you exactly what I'm talking about. So if we remember correctly, my M1 Finance account had $12,022. And I'm going to contribute $15,000 a year. I'm just throwing this number out. It could be more, could be less. Can't really predict. Dividend yield is going to be 10.76. And let's just say my annual share growth is going to be 5%, because I think that's pretty conservative, especially when we look at the S&P 500, returning 9 to 12% every year. It is currently returning around 9%, and we're not even halfway through the year, which is crazy. So, my starting principal is 12,000. Every year I'm going to add 15,000. The dividend yield currently is 10.76, which can fluctuate, and my annual share growth is 5%. So I'm 33, and you can adjust this to your liking. I'll put the link in the description below. And if I start out this year and I don't put anything else back into my account, I should get $1,294 in dividends. And those are going to be reinvested to give me 13,316 with principal growth of 12,623. So what I care about is the annual dividend and my principal, because those are going to be, that's the principal is going to be what my full account value is when I'm retired. And my annual dividend is what I can expect to earn in income for a year. So if I wanted to, let's say, retire at the ripe age of 55, I could say my principal's at $1 million and my annual dividend is going to be 100,000. So just that was an example, but let's go through this. So at this year 33, I would have that amount that we just went over. But let's say I did this until I reached 50 right here. So if I did this until I was 50, I would have an account value of 1.19 million and receive $128,000 in dividends every year. That's pretty good considering, I'm putting in a kind of a minimal amount, 15,000 a year. Let's just do some quick math together. 15,000 a year divided by 52 divided by 40. That's a wage. If you want to make that exact amount in a year, you have to get $7. You have to be paid $7.21 an hour. I think the minimum wage right now is, 12 to 20, depending on where you live, what states. I think the federal minimum wage might be around 7 something. So, yeah, that's what that looks like there. But let's say I continue to do this until I'm 60. I'm just going to go on down 60 right here. Now, that extra 10 years of compounding, dividend reinvestment, and the share growth gives me a $5.4 million portfolio with $589,000 in dividends. Talk about a freaking snowball. And then so on and so forth. 69, I should have a $20 million portfolio. If I do this until I'm 80, 100 million with 11 million in dividends. That is the power of compounding. And I would love if someone could fact check me on this, because I did pull this from Market Beat, Market Watch. My spreadsheet is actually a little bit more conservative and more safer and reliable, just because I do not account for dividend growth. So what that means is, let's say IEP, BTI, MO, JEPQ, JEPI, Takeda Pharmaceuticals, Dow, if they raise their dividends from, 3% to 3.7%. I don't account for that here. So I'm leaving out some other potential growth, which could result in potential earnings. So, um, yeah, it's pretty crazy. So this is my latest and greatest dividend portfolio. I removed my Ryan Makes Sense index fund and I removed my older dividend portfolio to combine them into just one single dividend portfolio. So that gives me now this dividend portfolio, and now I have my main account, and then I also have my Robinhood investing challenge, which I share with you guys. So yeah, let's just take a peek at the 15 different stocks in my portfolio. We're gonna look at their charts and just see where they are in terms of patterns. So when I am looking at dividends and thinking long term, I'm looking at where the stock has historically bounced, got rejected, etc. Current fundamentals are important, but long term, we want to see the stock if it's historically bounced off a line for 20 years. I want to keep track of that, and I want to make sure that it's going to continue to bounce and go within its set range per se. So without further ado, we're going to now look at Thinkorswim, and we do have 15 stocks to go over, so I'm going to make it kind of quick and dirty, but I will explain everything for each stock. Let's go. All right, so the first company we're going to look at is ticker symbol IEP. IEP, this is ran by Carl Icahn, and Hindenburg released a short report this week, basically calling the company something to the effect of running a Ponzi-like structure. I don't know if you guys can see this, but this company has been around since 2007. It has survived the great financial crisis. It has had major runs, and it has been kind of flat for about 7 years now. And this pattern that we're seeing right here, you can see me touching this line. This is resistance. This is support. It kind of makes a big triangle if you are looking at just those two lines. And typically, this is neither bearish nor bullish. This is more so a pattern to see if the stock is going to go upwards or downwards. Now, if this triangle was tilted more upwards, it would be an ascending triangle, which is bearish. And if this was tilted a little more downwards, it would be a little bullish. It would be a descending triangle. So it's a pretty neutral pattern here. We do have a lot of support right here. You can see me touching this line right here. This $36.94 support goes all the way back to 2008. So this reached 2008 levels. If you were able to buy this dip, congratulations. I did buy the dip, which is why I have such a huge holding in my M1. And I have these arcs, this Fibonacci arc. So basically every time we have an arc here, there is a major downturn in the stock. I would say a panic point that aligns to George Trich's periods of when to make money. So 2008, we had the great financial crisis, 2020, 2019, the great lockdown. And then 2030, 2032 is when we're going to see our next leg down, if I'm correct. Yeah. So that's the next panic period. I just have this as for a visual for myself. This pattern is, again, neutral. I'm a big believer in this company long term. It's ran by a really strong-headed guy. They do release earnings on 5/10. So we're going to see how that boils out. But yeah, it's holding well in this long-term pattern, and I am going to continue to add as long as the company continues to release strong numbers and growth. So let's now move on to our next one. All right, so the next ticker that we're going to look at is ticker JEPQ. This is the JP Morgan ETF Trust NASDAQ Equity Premium Income Fund. And as we can see, there's not much of a pattern we can draw because this fund is pretty new. So we're just going to do a $51.18 Fibonacci arc from there to the low of 39.61 right here. And as we can see, it's actually really respecting this Fibonacci pattern. Right here, we can see it bounces off support. This one goes through support. This one acts as support. And now this candle is showing resistance here, and resistance again. And then it breaks through. And now this month's candle is acting as support. So the next layer of resistance is going to be around 46 to 46.50. If it can break that, then we could probably see new highs. Looking at where this stock is going to bounce, we have 1, 2, and 3. These kind of are like the Fibonacci fans in a way, but basically the stock has always bounced off of this line that I'm touching here. And the same is also true. The stock has always bounced off of this line. And then this line right here, the stock has never gone beyond this line. It's always bounced off of this line. So we have all of our supports here. And now let's draw our resistance from the 51.18 and do this. So basically the stock price has never broken past this line that I'm touching right here. It attempted right here, but it failed. And so now we're going to see some fun action right here where it's called the apex, where essentially the stock price is going to have to make a move within this area where the resistance and the support intersect. So this will be fun to watch over the next 3 months. So grab your popcorn. Also, this fund is really new, and so I just wanted to pull up the holdings for this. It is, the top holding is Microsoft, second is Apple, Google, Amazon, Nvidia, and then we have Meta down here below. Do some research into this. Again, this is over a 10% yield. They have over 86 holdings. So again, do some research. Let's move on to the next one. All right, the next stock we're looking at is ticker symbol FTF. As we can see here, there's a few patterns going on. We have, first of all, this long-term support. The stock has never bounced off of this support. And we also have our long-term resistance where the stock has never essentially broken past these lines up here. And then we have some patterns within patterns, which are my favorite. So we have this pattern here. You can see me. This is support. And this one is resistance. Basically, this is a descending triangle, which is what we discussed earlier. And this is typically a bullish move. And what makes it potentially strong and better is that normally and sometimes the stock will often fall through this bullish pattern, which is called a throwback, before it gets to the final completion. So we can see it actually fell through right here. And it is now what I'm just going to call it is consolidating. So it is consolidating right here. And let's just draw a quick, I only have a single line there. Quick support and resistance long term. So as we can see, it's kind of bouncing in between this here. And so you might be asking yourself, okay, well, why are you really like into this one? So if you look also down here, do you notice how elevated the volume is compared to its historical volume? And if we look at, this is the monthly, by the way. If we look at last month's volume, it is at April had 3.5 million shares traded. We're currently in May and we are at 669,000. So we have 3.5 more weeks of trading. And if we multiply 690, let's just call it 700,000 times 4, we should get around 2.8 million in volume, which is on par with what we're seeing in the elevated volume here. And additionally, I want to show you a little bonus here. I'm opening a study which will show you momentum. So 1 second. So this is a technical analysis indicator that is very popular. I highly recommend if you are getting into stocks. But basically, you guys can see right here we have momentum really shifting. It's going from negative to positive, and we have these colored candles here. The bright green and the bright reds are standard deviations above normal trading volumes. So if there is more than average selling, it's going to be bright red. And if it's more than average buying, it's going to be bright green. And as we can see, over the past 5 months, let's say, we've had 2 months so far of more above average than the standard deviation of buying. So that is amazing. We can see momentum is slowly turning in the bulls' favor. And yeah, I mean, that's kind of another reason why. So I think we're going to see a move up to the $6.64 range. It's going to test to see if it can break it. And then I could see it going for, again, 7.15 and maybe just doing a long-term reversal overall. So I really like this stock. It pays a dividend monthly. And yeah, do some research if you're interested. So I'm going to get out of here and we are going to look at the next one. All right, we are now looking at ticker symbol JEPI, very similar to JEPQ. Again, both of these pay a really high dividend. This one has a little bit more trading history, which makes it beautiful to chart out. So again, I'm just going to show you right here. We have a channel. Basically, we have support and resistance. The stock has always bounced off of the bottom one, and the stock always has trouble right here. So we can see this bright green candle had a problem breaking above it, and it closed just under. And then the next month, it established it as support. However, support couldn't handle, and it broke through, and then boom. And then we had this right here, which is kind of a show of support. So we now have this top line acting as support, which was previously resistance. So we come back over here. Now we can see it's acting as support, and then it falls through. Now it's acting as resistance, support, resistance. And we have some Fibonacci arcs, and you can see right here, it really respects it. So we have resistance, support, and it goes up into the next ring, all the way up into the third ring, and then we have support here, and then now, so this is on the uptrend. Now we're going from the all-time high to the what is the lowest low. So now we want to look at this ring right here, and we can see this ring that I'm highlighting, that I'm touching, it lights up. It acts as support, and now it's resistance, falls through, acting as, it's trying to break here, and now it's acting as resistance here. And we're going down to the third rung, and now it's acting as support and then resistance right here. And then it could just kind of going through, and then we have resistance, and now it's acting as support for this month's candle. So what do you guys think is happening here? I kind of see a bearish flag, and let me just draw that for you. So we're going to go from the high to the low, and we're going to edit this, and we're going to make it really thick and noticeable for everybody. So I'm drawing a bear flag. So here's our flag pole, and then here is our flag. And I'm just going to make it really noticeable. Whoops. So we have the flagpole and then the flag. And now what the stock needs to do is it needs to test and break this, or it's going to test this again. You can see We've had a test here and a test here. It could come down and test here again. Time will tell, but that's the kind of pattern I'm seeing. Do your own research again. If you're interested in the stock, look into it. But we could see some sideways action basically until January of next year. In the meantime, I'm going to collect dividends on it. Let's move on to the next one. All right, the next one we are looking at is ticker symbol O. O, and it is Realty Income. And this company has been around as early as 1994. So it's seen some things. The dot-com bubble, gosh, 9/11, the Great Financial Crisis, the Great Lockdown, etc. So it gives us really good data in terms of technical analysis. So we can see this huge channel that goes all the way back to 2000. So this line acts as resistance, this bottom line acts as support. And we can see it breaks through sometimes, it falls back through, breaks through sometimes, comes and tests down the bottom of the channel. And now we're trading in what appears to be another channel. So we have this other channel right here, kind of acting as a downtrend channel where this bottom line is support and this top line is resistance. Right here, this blue line. And we can see it's never broken past this blue line. I'm just going to zoom in for everybody here. Let me scooch. There it is. All right. Now look at the beauty of the Fibonacci arcs. Fibonacci, if you want to do some research, look into Fibonacci. It's a basically calculated sequence over time. A lot of math. It's symmetrical in nature. So looking here, we went from the all-time high. I'm sorry, no. We went from the all-time low, recent low, to the all-time recent high. And look how amazing, even before the high and low were created, look, it's respecting it so well. So right now we're fighting to stay on support right here. I'm not really concerned about this stock. It represents 2% of my dividend portfolio. It does produce a beautiful 4% dividend, so this is amazing. Do some research into this one. I am going to be more interested to see what this stock is doing around 2025. So again, this is a long-term hold. I want to see, it's in two channels. We have the uptrend channel and the downtrend channel, and now it's in like a diamond. And we can see within this diamond, it's hit its head on resistance up here a few times, and it's also tested the bottom of the diamond. We'll probably test the bottom of the diamond again, which could be a really good buying opportunity. So, yep, just keep your eye on this. This will be interesting to see right here. This is the next intersection, essentially, where we have the long-term channel resistance and the Fibonacci arc. So I would just put a reminder on my tracker to come back here January 1st, 2024. Let's move on to the next one. All right, we are now looking at ticker symbol SPYD. This mimics the S&P 500. It's a high yield dividend paying ETF, and it's all scrunched up. So let me fix that for everybody, and we now can see it. All right, a little bit more. Okay. So we can see I created a Fibonacci arc here. We went from the lowest low ever to the most recent high. And we can see it's respected this very well. We have resistance right here on this red candle. And again, building its resistance turned to support all the way up to the third rung where we had resistance, support verified. So we were in this long-term channel, and now we're in this long-term down channel, and you can see it kind of created a diamond. A diamond is a pattern that should be recognized and considered, and we can see it tried to break through up here, it touched the bottom of the diamond, it tried to break through the diamond again, similar to how ticker symbol O is going to try and break the top again. Maybe it'll break up, maybe it will fall like the SPYD did. Either way, we can see that it's still respecting this Fibonacci arc right here, acting as support. We can see it's done really well. Support, support, support. I'm just going to zoom out a little bit, come back. There we go. So it's going to get really interesting to see what happens because this does mirror the top 500 stocks. We have everything going on overseas. We have politics over on our side of the water, I guess, and we have also just a lot of unhappiness with things. We have divides, social divides, you name it. So we'll see what the S&P 500 does. This year it has produced around 9%. So we'll see what happens. This is a really good one. If you want to track to the S&P 500, do your own research. Let's move on. All right, we are now looking at ticker symbol CCU. I'm not going to tell you what this company does. I want you to go research, Google it, do what you can. But look at this pattern. So this is similar to IEP, where it's kind of a neutral triangle. We have our top, we have our bottom, and we can see the stock is heading towards the next area of resistance. This is basically where the stock has always failed, except for this exception right here. We do see this bottom purple line has always been support. The stock has never broken this for too long. And these arcs right here that you can see me touching are areas of when to take money off the table. So right here, we could have sold at $94. And if we look right here, we could have sold at 82. And look where the next one's coming up, right here. So again, we could see a move up and then a move back down. That would be a bearish throwback because that's going to try and break up. Maybe it'll keep going. We never know what's going to happen. This is a pretty neutral pattern on the monthly. What we can do is actually look at the momentum. I don't think I've looked at the momentum for this one in a long time. Let's see how it's doing on the monthly and the yearly. Well, let me show you what I'm seeing. All right, do you guys see what I'm seeing? You can't really see it. I guess I can squinch it down and then make this a little bit more visible. This is awesome. Okay, so what we're seeing, let me just break everything down for you guys. So right here we have Ichimoku clouds, which basically are Japanese patterns. The red cloud is bearish, the gold cloud is bullish. Bullish being positive, optimistic, bearish meaning negative, pessimistic. So it is in the cloud right now, which is huge because it's tried to get into it 1, 2, 3, 4 times, and now it's moving up. Also, we can see momentum down here is strong. It's heading upwards, which is great. And if we look right here, we have several months of standard deviations buying to the upside. And there's these red candles here, although they are red in nature, they are not bright red, meaning there has not been significant selling past the normal standard deviation. So this is all really good. That's why I'm pretty optimistic it's going to come up and try and break 22. We'll see. Do your own research on this company. I'm really debating if we should look at the fundamentals so you guys can see what the true stock price should actually be. But I think I'll save that for another video. So CCU, this one's looking great. I do want to see what the momentum on the year looks like really quick. This is beautiful. So right down here, we can see momentum on the yearly is changing very nicely. Okay, so this multi-year hold potentially, if this continues to go from light red to bright green, bright green, bright green, we could see momentum swinging this way. And while we're here together, let's just look at the volumes for the past few years. So let's go back to 2016. 2016 had 52.3 million in volume. 2017 had 45.6 million. 2018 had 45.9 million. 2019 had 67.7 million, it's a lot. 2020 had 65.7 million. 2021 had 55.6 million. 2022 had 54.9 million, and 2023 has 12.192 million. So basically where we are now, we're almost halfway through the year. And let's say we get to 13 million. So we're looking at about 26 million shares traded for 2023, which would be astronomically lower than what we've seen over the past 7 years. So we could be seeing a false flag where the price could be being manipulated on the long term to give everyone hope that it's going to go up, where in reality it might go down. So again, always do your own research, and let's move on to the next one. The next one we're looking at is ticker symbol SQM. Again, this is one I would have you research and look into because it's pretty exciting in my opinion. So looking at the long-term pattern here, this is an ascending, not a wedge, ascending triangle. No, I don't remember. But essentially what happens is, let me just zoom out to show you. We have support all the way down here, it kind of goes up, and then we have long-term resistance, which the stock has had a hard time breaking through, and then it finally breaks through, and it decides if it's going to bounce and act as support or if it's going to fall back into this long-term tight wedge. I think it's an ascending triangle. I'm just going to call it an ascending triangle. And then before I was calling the other patterns ascending and descending wedge triangles. Those are wedges. I was talking about wedges. So this is an ascending triangle. So basically the price is getting forced up to ascend, and then it finally breaks up, and then it has to decide if it's going to fall back down here. This is 2% of my portfolio, and I'm really excited about what it's going to do in the long term just because of what it is. But since we're here, let's do this together because I think this is a good one we could do. So we're at the low here, which is 1379 right there. Going to the high of 115.76. All right. And let's just see how well this is respecting the lines. So the thing about Fibonacci, which is crazy, we did the bottom here and the top here, but look how, even before the pattern was created, it was already calculated that this was going to be resistance. Look, it tried to break it 1, 2, 3, 4 times. And then down here, it establishes respect for the pattern. We have resistance, 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 resistance. Finally, support, 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 support. And it moves up to the next rung. We have resistance here, and then we have support. And then it just goes and plays around up here. We have three significant areas of support where it bounces, bounces, bounces off the third rung, and it finally breaks through. And now it's currently in the second rung right here. This is acting as support and support. I think personally this is going to falter through unless, you know, what this company does really becomes in demand, which I think it will eventually, but maybe not anytime soon. So just let's look back at the last few months. So let's look back at January. So January 2023, there was 26.2 volume, February 28 volume, these are millions, 44 million volume, 56 million, and now this month we're at 9 million. So if we do 9 million times 3.5 more weeks, we're going to get to around 30 million in volume, which is pretty weak given the overall trend. So I think we're going to see this come back down to at least 59, maybe 23. This is going to be very volatile, so do your own homework, see what happens, see if you're okay with this or not. But we'll see what happens. I think we'll play around in this triangle right here, and maybe it'll go up, maybe it'll go down. So that's SQM. Let's now move on to the next one. All right, the next one we are looking at is ticker symbol DOW, Dow Inc. This is a chemical company. I really like this stock because it is historically at good prices. And let me just show you guys. All right. You can see my screen. There it is. That's much better. Okay. So this company has, I don't want to say fallen from grace, but it's, it had a really, really deep low around 21.95 during the Great Lockdown. and it went up hundreds of percents. Let's do this together since I have not done this yet. Let's actually update our supports and resistances here. So we're gonna go here. So the stock has never broken this, and it's acting as support right here. Yep. So I like this channel. Ooh, if it comes down here, good load. That would be beautiful. So do your own research. 21.95 right here. And we're going to bring this up to 71.86, right? That's good enough. All right. Look at how well it respects it. I'll just zoom in. It's going to be very big. So we have resistance right here, and then support, resistance right here. Can't break the rung. Comes through, and now we're at the third rung again, resistance, and now we're back over here. We have support, resistance, 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 boom. Now it's acting as support, but it broke through, so now it's resistance again. So we could see this come to, this is going to get very exciting this summer. We're going to see a move up or move down, essentially. This is like our apex. Oh, my head's in the way. Dang it. Sorry. Okay, we're coming to an apex right here where we have resistance and support colliding along with our Fibonacci arc, which is exciting to me. I think this is actually going to break upward because we are in a, it looks like a bull flag. So I showed you the bear flag earlier, and now here is I showed you the bear flag earlier, and here is the bull flag now. So basically, we have our flagpole, which is that really thick purple, and now we have our flag, which is again another thick purple right here. And what's happening is that basically we had a huge move up, and now it's trading in this up and down trend before making its next way up to about $60. Yeah. So if this goes down, I would want it to go down because I would love to add this one even more. If it could come down to around $40, that would be awesome. But we'll see what the stock gods have for us. That is Dow. Let's move on to the next one. All right, we are now looking at ticker symbol TAK, Takeda Pharmaceuticals. So I did several things here. I've created supports and resistances, and I've created a Fibonacci arc from this high in 2018 all the way to the low in 2022. And what is amazing about Fibonacci arcs, aside from their deep calculations and symmetrical patterns overall, is look before even this arc was created. We have the price bouncing off here, acting as support, and then finally, like in the future, it goes to show that if you are creating this type of symmetrical pattern in advance, trying to figure out what's going to happen, you can totally try and pinpoint and see what the stock price will do. But I own this stock based off of fundamentals. I think the stock is undervalued. I don't know if they're paying a dividend right now based off of what I'm seeing down here. I can just go ahead and look in a minute. But the stock has risen from $12 to now 16. Let's see. TAK dividend history. Okay, so the last time they issued a dividend was 9/22. It looks like they only do 2 dividends a year. Interesting. So they did not do one for March of 2023, and I don't know if they'll do one for September, but it is worth holding on to just to see what happens. I'm up pretty well in this stock. Let's see, FinViz. And we're going to TAK. I know I've received a dividend from this company before. So they're showing a 6.27% dividend, but again, they are not paying dividends right now. Let's just see dividend. Yeah. So yeah, they stopped the dividend. We'll see if they bring it back. They have earnings. May 11th. Sweet. So I think they have earnings here soon. We'll see if they bring back the dividend. Who knows? They had it for since 2018, and they paid through the Great Lockdown, which is crazy. So we'll see if they bring it back. If they don't, I'll reconsider this position. But until then, I do like this company. And since we're looking at the page, they bring in 29.4 billion a year, and they have positive income of 2 billion. So they're profitable. They have little. They're paying off their debts. They have a lot of shares out there, though. They have 3 billion shares outstanding, so that's quite a bit. Institutions have been buying. Anyway, this one looks good overall. The overall pattern basically just a bounce. We'll see what happens over the next couple weeks. Maybe they'll bring their dividend back. I don't know. So let's move on to the next one. All right, next company we are looking at is ticker symbol MO, Altria Group. I believe this company is affiliated with tobacco. You see all this green down here? These are dividends paid, which looks like they've done since 2005. The stock was as low as 74 cents back in 1985. Looking at the current charts, let me just zoom in for you guys. And I'll do a little bit more of a zoom. All right, so we are in a couple things going on here. Okay, so from this high, I've created 3 resistances where the stock has historically had trouble breaking through. We can see the stock has successfully broken through over here and has created a new support. We have this problem resistance here and this problem resistance here. And as we can see, the stock has never broken past the one that I'm highlighting for a sustained long time. And I just want to show you guys what we're seeing right here. We have a flag down, flag this way. This is a bear flag. So again, the flag pulled down, flag going this way. We should see the stock come down probably. Ooh, a move down to 33 would be crazy, but it could go from 46 to 33, or it could just keep trading until we get to this apex where it might decide it's going to move up. Do your own research on this. Let's move on. All right, the next one we are looking at is ticker symbol STWD. This is a real estate investment trust, a REIT. And let me just zoom in so we can get a better picture of what's going on. All right, so it just looks like it is really having a hard time staying above this Fibonacci arc. We went from the lowest low of 759 to the highest high of $27.01. And it is respectfully, falling through this Fibonacci arc. So I think given this huge downtrend, it could come to around $15. So yeah, I do, since we're here, let's just see what's going on here. I think I'm down 18% on this one. I want to see if institutions are buying this, or if it's being manipulated, are institutions buying or insiders buying, etc. So we have 11% dividend right here. It's showing as very undervalued. They do have a bit of debt. They are paying it off. They are profitable. They make 2.2 billion in sales with 854 million in income. That is great. They do have quite a bit of shares float outstanding. Institutions owns 46%. Let's see if that has gone up or down drastically. All right. 46% are insider or institutions buying the dip, or are they selling? Current data shows they are buying the dip. It is at 49% ownership now, which is fantastic. So, um, these levels are not bad at all, in my opinion. Given the sales plus the income and the market cap, this is showing as very undervalued here and very undervalued here. I might as well just sell TAK and put it in STWD. We'll see. All right, so that looks good there. I like this one. Let's just scroll down since we're here. COO General Counsel sold November 15, 18,000 shares. That person owns 275,000. So less than 10%, maybe around 5% of what they did. So not too bad. Net revenue or total revenue going up. It's growing. Net income doubled. Jeez. So this looks good. I do want to look at their balance sheet really quick while we're here. They have 261 million in cash. Total assets 79 billion. Total liability 72 billion. That's a little too close for comfort, honestly. Total debt 20 billion. That's disgusting. That's crazy. Did I read that correctly? Yeah, I did. Is this US based? Yep, USD. Okay. So yeah, this looks good as long as they are being careful. They do have earnings May 4th. Oh, they just had earnings. What did they report? Uh, they met the estimates. Surpassed Q1 earnings and estimates. No, that's yeah, Starwood meets estimates. So nothing really, kind of a nothing burger. So that's Starwood. Let's move on to the next one. All right, guys, the next one we are looking at is ticker symbol DAC, Danhouse Corp. Do your own research into this one. I'm a little mixed. I'm more so here for the long-term pattern. Let me just blow this up for you guys. Okay. And I can do this and this. All right. This company, gosh, imagine buying at $2.50 and then having it run to 100. I do want to do just a couple things here. So I'm going to go to the very low of 250, which is on this candle here. Not quite perfect. Not quite perfect. So let me just adjust this really quick. So the low is 2.5 and the high is 107.47. All right, there we go. Yeah, let's now look at this. All right, so it is respecting this Fibonacci arc, so I can say with confidence that this arc is viable. So we have resistance here, and then we have support, resistance, resistance, and now this candle bouncing off is support, 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 and it made its way around, and now it's acting as support, 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 and resistance. And as we can see now, we have, it looks like another bull or a bear flag where we have our flag pole going down here. And now it's in a little diamond trying to figure out if it's going to go up or down. We have never seen the stock price break below this pattern, this channel bottom right here. So this channel is the support right here. And here's our resistance. And we can see it's had a lot of trouble trying to break the resistance and it's never really fallen through support. I'm going to go ahead and tell you it's probably going to break through the support here, but honestly, it's bounced off the support 3 times. So we'll see what happens. They do report their earnings. Let me tell you. Next week or the week after, 5/15. So we'll see what happens here. Do your own research. I am bearish on this for maybe the next year or two. But if we look here as well, volume picked up immensely right here and it's been fading downward. So last month's volume was 2.6 million. from 2.9, from 3.5, and we're right at 686,000 in volume. We have 3.5 weeks, so around 700,000 times 3.5, around 2.1, 2.2 million, which is a little bit less than last month. So again, we are fading unless we get amazing earnings on the 15th. So we'll see what happens in a bearish pattern. The bear flag, do your own research on this one. Let's now move on. All right, the next one we're looking at is ticker symbol BTI, British American Tobacco. Very similar to MO, Altria. This one is kind of holding on for dear life. Similar bear flag here. We have the flagpole, and you can see bounce here, and then we had a flag, fell down. We have another flag. We have another pole here. Flag. We're going to come down, I think, to the $31 level, which could be a really good time to buy, depending on your tolerance. But I'm going to be watching this area over the next few months. BTI. Not really a crazy, insane pattern. Let's actually just do this. The lowest low, the recent lowest low here is 394, cap 398. And let's go to 73.41. Is it respecting these? Yep, bounced here. It's respecting it pretty well. Resistance acting as support. All right, let's see what's going on. Okay. So yeah, this is a huge Fibonacci arc. Man, if it could get, it's going to teeter here. Maybe it'll fool around, maybe get to 25. Who knows? So I'll be watching this one over the next year just to see where it goes. Do your own research. Let's move on to our last one. All right, the last symbol we're looking at is ticker symbol RVT, Royce Valley Trust. Look into this one. I will just tell you from a very high level, this is basically it tracks to small caps overall in the stock market. And it does pay a dividend, I believe. RVT dividend history. Yeah, let's see. Yep, so it paid a dividend on March 10th. Let's see, does it pay monthly? No, every 3 months. So March 10th, it paid a dividend. Great. So yeah, let's look at this chart. You can kind of see it's in a really big triangle. We have our bottom here, support, resistance here, and now we're kind of just floating in the middle. Not really going anywhere. It had a hard time breaking this resistance. So I think we'll see it come down to 1169, where it'll probably test a few times. And since we're here, let's just look at momentum. It looks like momentum's currently down, but maybe it's trying to fight. Let's find out. Ooh, look at this. Turning up. Turn up for what? That's not how it goes. Just going back. Okay, so here's the red I was talking about. See how this red right here, it's really hard to see. This red is the standard deviation red of selling, which means there's a lot more sellers than normal. And when we look at the chart as a whole, you'll see there's not any bright red ever really, except for over here as well. This was 2003. Yeah, here's some bright reds over here. But we haven't seen any in a while. If we're looking out, look at this uptick in volume and all the green. Pretty crazy if you ask me. And then we have this bright red going to dark red, which ultimately might lead to green if history repeats itself. So again, no real patterns here. This is a bullish cloud, so again, it could try and break upwards here. try and get to 15, or it'll stumble to 11, maybe go down to 9s. So either way, if you're playing this long term, don't bet against the US, I guess. But that wraps up our stock review. I do want to do a quick bonus for you guys. Hey guys, I told you I had a bonus for you, so I wanted to go ahead and just run through some quick numbers really quick. Can I say quick anymore? So at the beginning of the video, we looked at my M1 Finance portfolio. It had a 10.76% dividend. I want to put that up here, 10.76. And we're going to do annual share growth of 5% a year, just being conservative over the lifespan of this portfolio. And again, just reiterating, I am not calculating for dividend growth, which happens when companies continue to execute. So that is a portion of gains not being shared here, which I think goes to show that this spreadsheet is a little conservative than other calculations you'll find on the internet. And what I want to show you guys here is, imagine if you were not starting with 10,000 or 20,000, but rather you were starting with a seed of like 100 or 150,000. And let's say you are able to contribute, 10,000, let's just do 10,000 a month. No, 10,000 a year, 10,000 a year, sorry. So the 150,000 maybe you have laying around because you want to buy a house, or you're just, that's in your savings and it's not really doing anything. Well, what would it look like if you put it to work in a dividend portfolio similar to the one I showed you? Again, do research if you're going to try and do any of that. Well, your first million, if you were to invest 10,000 with a principal of 150,000 and dividend stayed the same around 10.76, and share growth stayed at 5%, conservative there, your first million will be at 44 years old. And you would be getting 108,000 a year. Pretty amazing. Let's say your goal is to retire at 55 and you stick to that schedule. Your portfolio value is going to be 5.2 million and you'll be making 567,000 a year in dividends. So what that looks like, 567,000 divided by 12 months, you're going to get $47,000 a month at 55. Isn't that crazy? Now the retirement age is 67. If you do this until you're 67, again, you do that 150,000 once and you just put 10,000 in until you're 67, you'll have a $30 million portfolio getting $3.3 million a year. Let's see. $3.3 million a year divided by 12 months, $275,000 a month. Could you even fathom? Let's say you do this until you're 90. 895 million. You'll break $1 billion at 91 years old. If you're 33 today and you did all that until perpetuity, basically. Yeah. So that's with dividends reinvested and you continue to add 10,000, meaning you would still have to continue to put 10,000 in every year. So you'd have to have another side income, maybe some real estate, and you're just putting it away in there. Whatever you want to do. So again, you guys can download this, and let's say you have maybe 300,000 here, and you're going to put in 10,000 every month. And you know what? At 41, you'll have 1.1 million. And again, if we go to 55, 9 million with 971,000 in dividends a year. And then the actual retirement age of 67, you'll have 52 million. So just a crazy, insane compounding snowball that does not take into account dividend growth. So I just want to share this little bonus with you guys. It's pretty motivating, honestly, to me. So if you guys made this far, please consider subscribing, hit the like button, share this sheet with your friends, download it, share it with your family, share it with your kids, and I'll talk to you soon. Bye.